Welcome to Markets Now. I'm Michelle Rook along with John Payne with the Hedge Point Global Markets. And we had a mostly lower day in the grains, kind of mixed in hogs, higher in the cattle futures. John, let's talk about the grains first of all. Obviously, we're end of quarter, end of month, and going into
Yeah.
reports. And so we kind of did see a little consolidation in the grains as we went through the day, didn't we?
Yeah, we've moved quite a bit here, just from the lows in the corn, 40 cents front month, in the back of the curve for wheat. Looking at more in July. I guess that wouldn't be too far back, but looking at almost $1 rally in that market. And the structure of the markets haven't changed much here. We have seen old crop corn gain on the back end, specifically in the front month contract in May. I think the stories that are written for corn, which are high exports from China, this recent kind of run up that we've seen, I think, are going to need to be driven by something from South America in the near term, and then of course from the United States in the more longer term. But it's really early for me to get too concerned right now. I know weather
Yeah.
isn't great, but it's just looking at how we did last year, the pace of planting was slow. I don't think we were 10% planted by May. So at this point, I really wouldn't be too cautious on making sales should you get a nice report run up tomorrow.
Yeah, so let's talk about that because we've run up into chart resistance in both old and new crop corn. So talk about what we need in the report tomorrow to keep that rally going or get through those resistance areas.
Yeah, I think the corn, you just look at the two markets differences. Right now, the old crop grain stocks, I think, is where the surprise could come from. Now, for
Right.
me, I mean, I look at feed numbers. You have more hogs than expected. The cattle numbers are what they are. But at this point, you wonder what feed is going to look like here. And I think that's where this disappearance can come from. We have a ability to track certain things with the USDA, exports being one of them, but the feed residual use, which is really what can change the market, is almost impossible to track. So you got to track margins. In the case of hogs, we've seen them come back. So I will say, I would fade bad. I would buy breaks and sell rallies on the good news and bad news as they come. I think this is a market that's going to be more sideways in nature, and when it's really, really bearish, that might be the good time to make the purchase. And when it's really bullish, like with the report we got just at the end of the year, where everybody was hair on fire about hogs, that was the high.
So soybeans have also had about a 50% retracement off these recent lows. So, again, I've been surprised to see that maybe going into the report, but what do you think we'll see tomorrow, and what do we need to see there for the market to keep going or to keep recovering?
Well, I think that the market will really want to see the new crop acreage be light. I think that sets the stage for any type of rally. I don't know if the market's going to buy much as far as adjustments to demand. Crush has been really good, and the exports are what they are. We're pretty much aware of how those have gone. So I think in the shorter run here, beans are a function of the South American supply. Argentina is going to rear its head, I think, specifically in the meal side. Would say if you're going to look at meal, look at the deferred contracts. That's where the value really lies. But I still kind of want to talk, not my book, but talk the hog producers I work with. They're not making a lot of money here to get those guys to go out and want to buy soy meal ahead. It's a stretch. They're not making any money buying it here at 450.
Yeah.
Why would they chase it upwards of 480, 490? I think that situation needs to change here.
So, John, we heard some talk about Argentina's peso program being
Yeah.
re-implemented today. Is there any validity to that?
Yes. So our contacts in Argentina have, verified that that's going to happen. I think the question now is they're going to add corn to it, and that I don't know if it changes the game much. I mean, Argentina doesn't have the corn to sell, but I think it shows here in this kind of post-COVID world where currencies got really weak. Now we can talk strong dollar, strong euro, whatever, but they're all weak across the board in regards
Right.
to debt load. And you see Argentina, they're kind of sitting in the captain seat of inflation. So they're trying to get their farmers to move product, and I think it's going to take some sort of barter to do it because they don't want the cash. They don't want cash in Argentina. It's a negative asset.
And the wheat market also lower. Chicago led the losses. What's surprising about that is just the fact that Chicago versus Kansas City, that spread is historically wide here. Why do they keep pushing that?
Well, the conditions in Kansas are what they are. We're very aware of how the winter's gone. It's not great. Um, but at this point, in my opinion, the value just isn't there. I think where the issues lie is Russia, and the U.S. doesn't want to export. I think I kind of operate under that fact. Is like there's something going on in the U.S. exchanges that doesn't want the U.S. to send supply overseas, so it needs to keep that buffer there. I think last week Russia's announcement that these export taxes might go up that's a reason to rally. I still think
Sure.
that in the longer run here, grains, specifically wheat, are going to have a problem, um, just due to the fact that the governments don't want to buy it at these prices. So
Gotcha.
you kind of don't want to fight City Hall here. And I think at $8.50, $9 wheat, especially on the July KC, that's where you let it fly.
Cotton market. We have seen a little recovery here, but what are you expecting in the report tomorrow? There's talk of maybe 2.5 million less acres, or at least that's the average trade guess, but could it be more than that?
Could be. I think that potentially if they're going to raise corn, it's going to have to come from somewhere in the south. At this point, cotton would be it. I think you're going to have essentially the same crop we did 2 years ago. So they increased it a lot last year because we had high cotton prices. Now the producer's obviously not in that same boat. Although today you see December contracts really rallying. I think there's a rally coming here, and I think it's based around China. China's slowly, kind of sleepily beating a lot of expectations in regards to growth and data coming out of there post-COVID. So it's been a little bit of a sputter for the post-COVID buyers, but I do think cotton is one of those trades you can watch. And if oil goes up, I think it's a correlation there. And then if the acreage problems develop in cotton, there's a buy potentially that could show up there as well.
Yeah, and the lower plantings obviously was a function of drought, but was there more to it than that?
Well, I think that part of it was drought, part of it was price. I think the war in post-Ukraine got everybody into into a little bit of a mind meld. It was, you look at where we were a year ago. I mean, this last 4 quarters have been pretty brutal for ag. Now we were at record highs. I mean, $13 wheat, but we've given back almost $5 in the last year just on a front month basis in wheat. In corn, it's closer to 3. So at this point, you have a market that I think is discounted quite a bit.
I
But there's
bet.
still more to go if we can have big crops in Brazil and corn in the United States.
Some sharply higher cash trade on the cattle, and of course, the board responded, and we're seeing new contract highs here to close out the day. How much higher do you think we're going to go there, John?
All-time highs on the April 24. So we're, watch those deferred contracts. That's where the buying has happened in the feeders. And for feeders to work at 222, where the back end sits right now, we'll call it November 223, you need 180 to make that work. And right
Wow.
now, I don't know. You look at 280 beef. Beef is down today, so I'm not calling it a false rally by any means. I think prices certainly could be supported here, but beef prices, you've seen what the Packers have done to the hog markets. They just quit buying. They just like, we're not making money here. We're not going to kill on Saturdays. We're going to slow everything down. And I don't think we're there yet for the cattle because we do have the supply issues. But I think that's a concern for me from the short side.
All right. Thanks for joining us, John Payne with Hedge Point Global
Thank you.
Markets, and that's Markets Now.